We start off with the concrete consumer. Despite all the headwinds from trade, tariffs, to recession fears, to soaring gas prices, it seems nothing has managed to knock down the great American consumer. And we saw more of that today. Walmart beating earnings estimates. We got some strong housing data. We saw jobless claims continue to fall. So as retail keeps rallying, is the consumer really the backbone of this market? How do you play it now, Guy?
You have to ask Melissa about ZZ Top. What's ironic about ZZ Top? What is the
irony of ZZ Top?
Frank Beard
is the one guy without a beard.
One guy without
Tremendous.
Bravo.
Can we do that ding
12
ding
years.
when they do the ding when somebody gets something right?
No cares.
How about if you
see? They leave me hanging. They're in the control room. Like, let's leave them hanging.
They want you to proceed.
And I am going to proceed with the show. How long have we been doing this show? Long time. Like almost 12 and a half years, as it turns out.
Yep.
First time, long time.
First time, long time. But one thing I've learned is you can never bet against the U.S. consumer. It doesn't mean I think the consumer's in great shape, because quite frankly, I don't think the consumer's in great shape. If you look at delinquencies, they're going up. Auto loan delinquencies at 9-year highs. There are a list of reasons why the consumer should be basically tenting up, but they're not. And it manifests itself in one of two ways. They spend money, and look at MasterCard, Visa, all-time highs. We've talked about those stocks forever. And the fact that as long as the stock market, in my opinion, the ultimate barometer for consumer confidence, as long as the stock market keeps going up, consumers will continue to spend money. You saw this change October, November. They stopped on a dime. So as long as the market continues, the consumer's in great shape.
Yeah, but real quickly, Guy, I mean, if you want to look at the stock market, let's look at retail stocks. They act absolutely horrible. The XRT, the ETF that tracks the retail, is down about 20% from its 52-week house. Look at your Home Depot, Pete. It literally can't get out of its own
your Home Depot, Pete.
It closed on the low today, down 8% in the last few weeks. Walmart's close was atrocious. It gapped up 4% this morning. Good results. They had some stuff in there that I think you could probably pick at, but it closed, up 1.25%. So retail stocks are telling you a slightly different story than the S&P 500's bounce over the last few days since that Monday disaster.
Tim's Macy is also
sure. I'll play that one.
My Home Depot.
Why wouldn't I? It's interesting, though, if you take a look at different levels of retail, or essentially new retail. So if you look at Etsy and I don't know, eBay, but there are certain.
But let's not look at Etsy.
No, but let's do it, because if I look at new age retail and some of these online guys, the iBuy ETF is up 50% over the last 2 years. iBuy, and the point there is that yesterday's retail is not necessarily today's retail. So I agree with you looking at the XRT. It's been a death trade. It's down 13% against the S&P on relative basis since early January. But I don't think that that's necessarily how you're gauging retail. I don't know if it's a good read.
I think when you look at the numbers themselves, though, the numbers were great. I think when I look at Walmart, the fact that it was up as much as it was today, probably up more than it should have been. And the reason I say that is I just look at where it's trading on a PE right now, right? They do have some growth. The e-commerce growth was outstanding, 37%. You look at their transactional growth, 1%. You look at a lot of different numbers, and they were all very, very strong for them today. But the Home Depots of the world, Dan, let's not forget, this is now the time for them, right? I mean, this is Christmas in the springtime. That's what it is for Home Depot. So we'll find out in the next quarter how Home Depot's doing, because I think people are holding off right now. They're worried about the housing market in some cases. They shouldn't be. I mean, one of the things that I pitched a couple of weeks ago, or whatever, actually it was back in December, was Lennar. And the reason I pitched that one was it looked like the value was there. They've done a great job with acquisitions. They've done everything right. And now all of a sudden you hear and you see a great upgrade today of another one of the names in that, KB Homes. It's unbelievable how cheap these stocks still maintain where they are right now. And when they've got the rates where they are, I still think that there's plenty of upside for a lot of these home. And throw in Mohawk, for instance. That's another stock that I pitched out one. Why not?
Why not throw in Mohawk? Second, trading at 21 times.
It's too high of a PE.
Low single-digit grower for eternity. It probably is flat forever at some point in the next few years once they kind of get to a certain scale with their online growth. I think it's really important to look at Amazon. When Amazon reported their Q1, they guided the Q2 to 18% year-over-year sales growth. That's half of what it was in Q2 of 2018. So what I'm saying is...
Do you think that's competition, though, or do you think they're losing something somewhere else?
Ask Tim about his Macy's. I'll tell you what, I don't know.
No, you're seeing e-commerce growth in a lot of different retail.
I think you're wrong on Amazon. I mean, the fact that their growth is down, there's no arguing that. Yeah. But when I look at their fulfillment and their logistics and their commitment to essentially building out the chain that makes them stand out, and I don't care what Walmart does, they're not going to touch Amazon in terms of that. And therefore, this is a company that can turn on profitability.
But they just said, well, can they turn on profitability? What did Walmart tell us this week? They're going to go to
I'm not talking about Walmart.
we're talking about competition. One-day delivery. Okay, we saw this with all your hardline guys when they were trying to do this omni-channel thing. These stocks got murdered a few years ago when they started making those investments. So now we're going to have Walmart and Amazon destroying each other on getting things to you within an hour.
The other twist is the impact of the tariffs. I mean, we heard Walmart and Macy's basically say if there's another round of tariff increases, the consumer will feel the impact. Prices will probably have to go up.
And prices going up is code word for inflation. And we talked about that a week or so ago, and we said one of the unintended consequences of this trade dispute.
Maybe it's just a tax.
Or a hidden whatever you want to call it.
Doesn't the Fed distinguish between the two?
And
isn't that what matters?
That's a semantics game.
But that's what matters.
Fair enough.
Okay.
Let's talk about Walmart quickly. You know, you talk about margins being hurt. Their margins are going to get hurt. And you look, inventories are up 3.5% year over year on sales growth of 1%. You know what? In this environment, margins contract at 21 times forward earnings. It's way too expensive. And I think Pete would agree with this. Tim and Dan as well. Target at almost half the valuation, which reports on May 22nd, I think is a better play.
And I think those numbers are going to be great from them, by the way, because of the fact that they've really committed to the e-commerce and obviously redoing so many different stores. I mean, that's been in their model. They put in $7 billion into this project. And that's, I think, showing people. And I think people are seeing that. I think you're going to see the traffic going into the Targets of the world because of what they're doing. And the margins are going to be better, Mel. They're not just focused on grocery the way Walmart is. And it's not that big of it's only 20%. At Walmart, you're talking 50+% of it is coming from grocery. There's no margin there. And so that's why I think Target's still cheap. Would you buy it here, Pete? Yeah, I'd absolutely buy it. I'd call it myself. I happen to be in Minneapolis, Minnesota, downtown, right on Hennepin Avenue.
Pitches also.
Yeah, I got to tell you, Brian Cornell, man, you are the man.
Right. Look, the dollar is another side of this, though. If you think that there's inflation, actually, the strange thing about this is where the dollar is your friend. So the dollar should be actually offsetting a lot of this import price dynamic and the tariffs. I'm not saying that that's what you want. And typically, we talk about a strong dollar being a problem for multinationals. In the case of the domestic story, that's really what it is. And if you look at the market perform today, there really was this bifurcation between what was outperforming was something that was more domestic oriented and things that felt like they were more in control of their destiny versus if you look at emerging, they were down. It underperformed the S&P by 150 bips today. And the dollar is a big part of that.
Hey, Dan, I just looked just to correct you on one thing, though.
Sure.
I'm looking at Home Depot. It started the year at 172, and now it's 192. So it's not a lack of performance. Maybe recently it's pulled back. That absolutely is right. But from 172 to 192, that's not so bad.
What did you correct me about? I mean, the stock.
You said it's not doing anything.
The last 2 weeks, and the market's bounced a few percent this week. It can't get out of its own way.
So you don't believe in the idea that a rotational market is a good thing?
I don't know.
So you don't want to see rotation from one stock to another?
When I look at consumer discretionary,
not just MAGA,
I see
bro.
Booking.com and I see Expedia down 15% from their highs last year. They haven't even sniffed them in this rally. Okay, I see Apple, which literally, it's not just consumer sensitivity here, but what do we see of retail sales numbers in China? Apple couldn't get their mojo back in China until they dramatically reduced prices, and then
which that was a mistake by them. Tim Cook made a mistake there. They priced it way too high, and once they corrected it, things started to clean up.
But it was also because the value-added tax was cut.
No doubt.
I mean, that was a
back to guys that diatribe about the consumer, and they shouldn't be.
And you're focused on the phone still, and you're focused on the wrong thing still at Apple.
You guys are talking about Walmart. This is the place where people go for staples. This is where they go for the groceries. So you're going to have less sensitivity there, right? This consumer discretionary. If I'm just looking at the stock market and what these stocks are telling me, it's telling me something different.
If you calm down for a second, I mean, you'd think about really this is the same thing we've been talking about Walmart for a long time. This isn't. I agree with you. I think any of the big box retailers are under pressure in terms of their labor costs, in terms of their input costs, in terms of a consumer that's not really moving the top line for them. All of their growth is coming from groceries, and that's $1 trillion industry that's as competitive as any part of the retail chain.
Right. Getting back to your comment, Guy, about inflation. All this competition means deflation in terms of prices. Because of the competition.
Yes.
It keeps
a year ago,
down.
I agree with that.
But it keeps
prices down. And you layer on top of that the fact that technology is such a huge driver. That's extraordinarily deflationary. But then you put on top of that the fact that this trade dispute, whatever you want to call it, it's not ending anytime soon, in my opinion. And I've been pretty steadfast on that. This is now May. This started in March of last year. And I don't think we're any closer than we were then. I would go as far to say we might be farther apart than we were then. Is it farther or further?
Further.
I meant to say further. Farther in distance. Right. Well, they're far away from us.
That's true, but probably not farther. I mean, China and the U.S. haven't moved.
It's further in the future.